All right, Biden inflation heating back up again. Put a little numbers up on the board the last 3 months at an annual rate. CPI 4%. Ex-food and energy core CPI 4.2%. Core services ex rents, that's the core inflation that the Fed ginned up, 6.9%, 3 months. Can't be good. Anyway, let's talk about it. Taylor Riggs, co-host of The Big Money Show, and John Carney, Breitbart News finance and economics editor and co-author of the Breitbart Business Digest. John, let the games begin. How bad a number was this?
This was very bad, not just because these numbers were bad and higher than expected, but because it is a confirmation that January was not an anomaly, that inflation is going back up. We haven't really made any progress on inflation for 8 months, and now for the last 4 months, it has been creeping back up. 4 months in a row of headline inflation month to month going up. This means the Fed cannot cut. They say they are looking for more confidence. I don't see how you could look at these numbers and say, I'm more confident.
Did anybody from the Fed speak today about this?
No, we're in a quiet period because we're heading into our Fed meeting soon.
Yeah.
But you know who we did hear from? Jamie Dimon. He was speaking overnight over in, I think, in Australia, and he said that the Fed shouldn't be cutting in the first half of the year, maybe the second half of the year, if at all, but they should be data dependent. We also had Art Laffer on our program. No, he's a friend of this program as well, and he said, interesting point, it's an election year. So the Fed cutting in the second half of the year, they have to be very careful. He almost made the point, do it now or do it never.
They probably won't do it.
Nope.
I don't think they can do it in September. If they tried to cut in September, that would be looked at as the most political cut there's ever been. It will create backlash. They know they want to defend their independence. They're not going to cut in September. So I think they're not. If they don't cut the first half, they don't cut the back half. Maybe they cut in November, like the week after, the day after the election.
Well, that's an interesting point. But Joe Biden has already said he expects them to cut before. If they do cut before, the other candidate, starts with a T, will scream at Jay Powell, which he's accustomed to doing anyway. So it'd be just like old times.
You have to think Joe Biden's advisors must have been pulling their hair when he was out there saying, I bet you they're going to cut, right? Because that actually puts the Fed in a really awkward position. Now, if they cut, they look like they are obeying what Joe Biden told them to do.
So, Taylor, it's just interesting. The stock market went up today. What did you say? The S&P hit a
record high.
Record high. So that's important. On the other hand, inflation is not creeping down. It's kind of creeping up, or maybe it's just creeping. But I'm just saying, this is something the Fed has to pay attention to. If you're going to meet your target of 2%, there's nothing in here that says you're meeting your target at 2%.
Right. And if you have a core at 3.8, 3.7, you're still almost double the target of 2%. I know the Fed usually looks at PCE, and this is CPI, but still we're nowhere near 2%. I think some of the notes I was reading today, it harkens back to the 1970s, the era when we thought that we had inflation under control, we cut, and then you saw a big reacceleration in inflation. I think that's what the Fed needs to be really worried about, is making sure, especially with the stock market at record high, you talk about financial conditions, they're loose. They're easy. You're not seeing credit spreads widen. You're not seeing all the traditional signals that the market is under pressure. And so all of this, I mean, even Bitcoin, for example, near 70,000, showing that it is sort of all risk on in the easing of these financial conditions.
Let's talk about Bitcoin. And I'm going to add to Bitcoin gold. Gold's had a tremendous move here. I think might have been off today, but it's had a tremendous move. And Bitcoin, ever since the ETFs were put into place, now, it got to, correct me if I'm wrong, but in round numbers, it's gone from 40,000 to 70,000.
Yeah.
I had a chance to buy it at $600 many years ago. I regret to say I didn't. John, what do you make of this Bitcoin rally, and is gold part of that?
Yeah.
Is this easy money, or what is it?
I think a big part of it is easy money. I think that people say that the Fed is very restrictive right now, but if you look at things like Bitcoin, it says no, they're not restrictive. A lot of people want to buy Bitcoin, by the way, as a hedge against inflation. That didn't really work at all. It's not a very good hedge against inflation. But I do think it is telling you that right now people are not saying, I better have a risk-off trade. You're not seeing that in the stock market. You're not seeing it in Bitcoin.
I agree with that. But did you know what Costco said last quarter? They sell gold bars. They sold $100 million of gold bars last quarter, and they launched today that they want to sell silver coins. So I think there is sort of this idea of where do you put your money in this sort of inflationary environment.
Well, that's the thing. Is gold still a hedge against inflation?
I think you could argue yes, or if you don't have faith in a currency, instead of putting cash under the mattress, you're putting gold bars in your bathtub or your pool.
Well,
I don't know.
Look, gold has traditionally been looked at as something
Bitcoin.
to diversify your portfolio. Own a little bit
you
of
should own a
gold,
little gold.
and now you can own it. You don't have to go to a gold dealer. You don't have to go to your broker.
Yeah.
You can actually go to Costco and own a little bit of gold.
But with these indexes or ETFs for Bitcoin, now that's a booster rocket.
It is.
And it kind of puts them into the game in a way that they weren't in the game before.
Although it does undermine part of like the original use case for Bitcoin. It was supposed to free you from the financial system. It was going to be its own financial system. What we're seeing is it's actually going up a lot because it's getting integrated into the financial system. Being an ETF means you can call your broker at anybody and say, hey, I would like to own a Bitcoin ETF. You don't have to go through all of the hurdles that you used to have to go to actually buy a Bitcoin. You don't have to worry about you losing your hard drive and losing all your Bitcoins.
That's my problem. I lost my hard drive with all my Ethereum on it.
Can I ask you, this is beyond the scope of this segment, but the Treasury and the Fed would like to control digital currencies. Do you think that will ever happen? There's a lot of opposition to it in the Senate, in the House, in the marketplace. But the Fed in particular talks about controlling it, creating their own.
A central bank digital currency?
Yeah. I mean, to me, I don't want that because I don't want them to control everything. But is such a thing possible?
I think to your point earlier about trying to evade surveillance, a lot of people who've talked about a Federal Reserve creating a central bank digital currency, they don't want it because it's really easy for a government to come in and say, actually, we don't like what you're doing or we're snooping on you or whatever and shut you off. You talked about China's central bank digital currency and some of the controls, if you will, that they have on their population in that
TikTok.
country.
It's called TikTok. That was a joke. It's sort of, not exactly. I mean, no, it does promote surveillance. I'll give you the last word.
So absolutely, I think it's a good idea to have things that compete with the official currency. So remember, Roosevelt banned gold ownership at one point. Banning, essentially this would be banning private ownership of cryptocurrencies. I don't think that's a good idea. I think the Fed should stay out of it. Let this compete with the dollar, just like every other commodity.
Friedrich Hayek. Competing currencies, wrote about it all the time.
And Jay Powell last week in his testimony said he's nowhere near looking at a central bank digital currency.
All right, kids. So, inflation still a little bit worrisome. That's what we got. All right, no Fed rate cuts. Sorry about that. John Carney, Taylor Riggs. Be sure to catch Taylor along with her co-host Brian Brenberg and Jackie DeAngelis. Big Money Show, weekdays, every day, 1 p.m. Eastern, right here on Fox Biz.